This question, Sekips Limited, came from the paper 2 in 2020, and it was an essay question, a 25-mark essay on business organisations and budgeting. So let's just take a look at the question. Sekips Limited is an established manufacturing business with a track record of profitability. The business operates a manual incremental budgetary system. So that's where we take last year's budget and we add on a certain percentage to come up with this year's budget. Although variances are calculated, so remember variance is the difference between the budget and the actual figure, at the end of the year, there are no monthly reports or analysis of the variances. Okay, so if you're going to calculate variances, you need to do something with them and look into the reasons behind them. There's no point calculating them otherwise. Most of the accountancy department have been there for many years, and some, doesn't say all, are happy with the current accounting systems. Okay, so there may be some complacency crept in, people that have been in the job for a long time. Let's read on. In order to develop the business, the managing director has decided that the company needs to convert to being a public limited company. So this is a PLC where the shares in the company are available to the public, so they're sold on the stock exchange. In order to attract future investors, the managing director knows that the financial controls need to be significantly improved. To achieve this, a new finance director has been appointed whose key priorities are to oversee the conversion, that's to a PLC, and to modernise the finance function. So at the moment, if you remember, it was a manual system, so presumably they're going to computerise it. The new finance director considers that the current budgeting system is not fit for purpose and intends to implement a computerised zero-based budgeting system. You've got to evaluate the impact that the proposed changes might have on Sekips Limited. So, identify the problem. What have we been asked to do? We've been asked to evaluate the impact that the proposed changes, so converting to a PLC and introducing the computerised zero-based budgeting system, might have on Sekips Limited. So the changes, as I said, converting to a public limited company, what are the pros and cons of that? And what are the pros and cons of changing from a manual incremental system to a zero-based budgeting system? So a reminder there, the zero-based system is where you start from scratch, there's no budget, and all items of expenditure have to be justified. Okay, so calculations and basic application, they haven't given us any numbers here. We haven't got any figures to work with. Therefore, we cannot perform any calculations, which is quite unusual for a Section C essay question. So the AO2 marks, the basic application, are going to be, sort of making fairly basic assumptions about the information that's been given. We won't get any marks for regurgitating, but they should be giving us a springboard from which we can work up to the AO3 marks, the analysis and evaluation. So if you remember, there are 5 marks available for AO2 and a further 20 marks available for AO3. So things we could include in there are just sort of stating the obvious, really, that the manual budgetary control system is likely to be less accurate, less efficient than a computerised one. Incremental budgeting can compound problems if previous budgets were inaccurate, so inefficiencies and overspending may remain. People have this use it or lose it mentality where they spend up to their budget to make sure they preserve it for the forthcoming year, and so on. Comparing the budget to the actual figure will highlight variances, either adverse or favourable, that need to be investigated. So that's about monitoring. So the budget itself is the planning part. Then we monitor, we compare the budget with the actual, and then we start investigating any adverse or favourable variances to establish causes. So with adverse variances, we want to find out what went wrong and try and deal with that, make sure it doesn't happen again. And favourable variances, what went right? So can we build on that for the future? Because favourable variances will increase our profit. We can then think about taking remedial action. So that's the control part. And at the moment, they're not doing any of that. They're not analysing the variances or taking any action. So it's all a bit of a pointless exercise. The other piece of AO2 there is you could talk about the low staff turnover, the fact that they've got experienced staff. So that would suggest, it's a stable company. That's probably a good thing, but you could add in there that maybe some complacency might be creeping in. So to get to the analysis and evaluation, the AO3 marks, we need to take each of the problems in turn and weigh up the pros and cons. So try and organise your answer. Don't just kind of scatter the page with a random assortment of points. Try and organise it into the 2 different things that we've been asked to talk about. So the conversion to a PLC and the budgeting system. And remember, you need balance. So you need to come up with an even number of points for both problems and fairly even number of pros and cons for each of them. So make sure that you develop a chain of reasoning. So that's using those connective words to build up your chain of reasoning, so linking points together. So an example for the proposed change to the budgeting system, you could say that although the accounting staff are experienced and there is low staff turnover, this may mean that they are resistant to change. There would need to be training on the new computerized system, which would have cost implications and could cause some staff to become demotivated or leave. Other staff, however, may see it as an opportunity to develop new skills and may seek a pay rise. So we're putting some balance in there, pros and cons, and pointing out some of these things are going to have a cost impact and reduce profits. Continuing with that theme, then, make sure we cover all of the points raised in the question without regurgitating too much of the source data. It's okay to regurgitate a little bit of it, so quote that in your answer, but make sure you go on to develop it. You're not going to get any points for just restating the points that they've given you. So what extra knowledge can you bring to the scenario? So an example with that for the proposed change from a limited company to a PLC, we could say that converting to a PLC will require the shares to be listed on the stock exchange, which is an expensive and potentially risky course of action. Furthermore, the directors will have no control over who can buy the shares, and the company could be at risk of a hostile takeover bid. So we're kind of bringing some extra knowledge into the scenario there, what we know about becoming a PLC from being an LTD, where the shares are owned just by a smaller group of people. And people can only buy shares if they're invited to. So when you're an LTD, you're not at risk of a hostile takeover bid because the public cannot buy shares in your company. Okay, so limitations, we need to think about limitations. So once we've done all the weighing up of the points, what extra information would be useful here? What do we need to know? Have they actually told us what budgets are currently prepared? No, they haven't. We don't know what kind of budgets they are. Do they do a full range of budgets, or do they just concentrate on a cash flow forecast? That would be useful information. They've not given us any detail about the variances, so no data on that. Are they significant? Are they adverse? Are they favourable? Nothing's been mentioned about that. How established is the business? That would be a useful guide as to how successful any sort of flotation on the stock exchange is likely to be. If it's a well-established business, then it's got a trading history of. If it's got a history of trading profitably, then that would make it easier to sell the shares. What are the trends for gross profit, margin, profit for the year after tax, that kind of thing. How do the staff feel about the new finance director's ideas? Are they receptive to some change, or are they resistant to the ideas? And then a final checklist. We're not asked to come to a conclusion, just evaluate the two proposed changes and their potential impact on the company. So before you finish up, just make sure that you've considered both the positive and negative impacts for both changes, the budget and the PLC, and that you've developed chains of reasoning throughout your answer. So use those connectives, things like however, in contrast, furthermore, consequently, although, similarly. This is not an exhaustive list, and if you want more ideas, just pop it into your Google search bar and you'll get a whole load of them there. Have you identified limitations? So that's really important. Another point I would normally say is, have you included calculations? Because most answers are going to require you to do something with numbers, but not in this case, which is very unusual. So hopefully that's given you some ideas of how to tackle this question. Have a go at planning your answer and then check that you've covered the main points. Have a look at the examiner's mark scheme. And don't forget to like and subscribe if you've enjoyed the video. Thanks very much for watching.